So yeah, so as far as what we're looking at right now, we have a range on USDZR. We have a nice range where they have money trapped. So realizing that we have this monthly resistance, right? We have this imbalance below, right? We have another imbalance above, right? Which falls in line with that bullish engulfing that it broke, right? So this is a high reactive area, high reactive area. So the next sell opportunity is coming inside of this area, right? So realize the reaction that we did get on Friday, right? This is Friday's candle. So um, right now, as far as a lower time frame, this is where we can just see everything, right? This is where we can see them set up to get to these certain areas, right? So as far as understanding how they played around in this area to get to where they are now, that's just what I'm about to dive into, right? So now when I get to a lower time frame, this is where I pull up my weekend separators so I can see where are the weekly highs and lows, right? Because that's where the market comes back to, right? So this is just showing the movement between each week. And you can see how they're just playing around in between these certain zones and just reacting at a certain, spot to just carry the trend and then hold it. You get what I'm saying? Like you can see the certain spots where they're just, consolidating over. You feel me? Like just being a day-to-day trader, having a higher time frame perspective helps you understand where they're holding the money at and how you can catch these fast reactions when it comes to just news. You get what I'm saying? So this is what I dive into after I get my high time frame analysis, right? So based off what I already showed you, you could just see that like, okay, I should just already be holding myself. Damn near every, pair that's in this market, like I feel like I should still be holding the trade in it right now since I started. Hey, it is what it is. We want to learn how to get in and get out and maximize our profits on a day to day. I'm an official day trader. I am a day trader, right? I'm a profitable forex trader, right? So this is just understanding like how they're trapping the money. That's all they're doing. They're trapping it to break it, fake you out, right? And they're designing the liquidity. They're designing the stop losses. They're looking for people to put buy stops and sell stops. They're looking for people to put sell limits and buy limits so they could just come there, right? Activate your orders and then just put you in drawdown. They want you to enter at these certain spots so they can come back and run your stop loss. Right. So it's just understanding like how we can like, really lower our risk. That's just all it comes down to. Like, how can we lower our risk? All right. So as you can see, they had us down here inside of this range, right? For 2 weeks, 2.5 weeks after we broke down. Right. So eventually we will come back to this equal high point up here, right? Look how they set these equal highs, right? Relatively equal highs, right? And it's more or less just understanding that you just have to just understand, you just have to see it for what it is, right? That's just a point of where they designed a lot of money to build up above this area to eventually come back and run it, right? So this is just a bigger analysis of where the overall market is going, right? So you just have to see what it is that they're giving you, right? So we are taught to look for certain things, right? Which are helping us read the certain moves in the market. So as far as an imbalance and imbalance and equal highs and equal lows, right? These are just simple things to just help you notice where's the next opportunity, right? So these imbalances just come from these large candles where there was no test of it when it was created, right? So this imbalance came from the daily, but look how it looks on the 4 hour, right? But at the end of the day, it is still an area that wasn't properly filled, right? So they're coming back to that open money spot. So when you understand the concept of the smart money, like, you can't sell the market without buying it, and you can't buy the market without selling it. So they have to have a certain strategic way to be able to transfer all of this money. This is trillions of dollars, right? So they have to come to agreements to actually move a lot of this money. So like, you got to truly understand, like, these are orders of our money being placed into the market, moving along with the trillions of dollars that's floating in this every day, right? So truly understand, like, these are agreements. These are agreements. This is live money. So as far as this certain setup, they created an imbalance, right? A sell imbalance a week before they came back, a week and a half, you can say, right? So my buy imbalances are my blue boxes. My sell imbalances are obviously my yellow, not my yellow, my red boxes, right? So before it got tested, this is where I'm managing where I'm marking off my imbalance, right? My imbalance is just covering up that large candle that had no test inside of it after it was created, right? From the last point that we had a buy, right? The last point that we had a buy before, right? So this is an open area, right? So as you can see what happened, right? When this was created, when they came back at the opening of this week, they came slightly below it, right? And they traded down for that week. So this was the whole move for the week, right? A downtrend since the opening of the market. So last week they gapped up, right? This was Monday. They hit it Tuesday, trended off for the day, going into Wednesday, right? So now this is where I'm just looking at the day-to-day momentum now to see, like, when possible things can happen, right? Because we have to pay attention to the fact that there's a new trend at the beginning and ending of every month. There's a new trend at the beginning and ending of every week, right? Every month, every year, every day. There's a new trend being presented to you at every single second. So there's a constant transition. So you have to truly understand, like, where the momentum is flowing, where are the orders going to be collected. So that's why you have to identify these certain things, right? So midweek reversals, right? High impact news events. The bros Shabazz and I, right? Notice the fact that they give out like a fake out move on a Friday, right? Call it fake out Fridays. And then they give like another false move on Monday, right? So we call it false move Monday, right? Fake out Fridays, false move Monday, right? I'm gonna explain it, right? And obviously we have the midweek reversal that happens between Wednesday, Thursday, right? That's why Wednesday, right? Midweek went obviously, right? So being aware of all of this plays a big factor to being a day trader, so you can maximize, once again, maximize on your profits. So what I'm showing you guys is what I do every day. After a move happens, I delete everything on my charts, right? If the move goes my way, I'm deleting everything off my charts, remarking it up, still having the same outlook, but now I have to understand, like, okay, how are they really about to play out this next move, right? Even when I lose a trade, yo, delete everything. I missed something, and that's just the process, right? So I'm looking for these setups every day. Where can they possibly happen from a high time frame, right? So this setup right here has always been there, but it's just more or less like I remark it every time, even though we was down here for a whole week and a half, 2 weeks, right? So realize that this imbalance was above this weekly high. So the market comes back to highs and low points, right? They come back to weekly highs, weekly lows, daily highs, daily lows. That's why I have the period separators and the weekend separators. So what I'm showing you guys makes sense. Monday's high, Monday's high, Monday's low. Pull back, last up candle on the 4 hour, right? 4 hour vision, right? So being a day trader, the 4 hour and 1 hour is your best friend. The 4 hour, you want to look for the breaks of structure, right? So monthly overall momentum, weekly for swing high, swing low, daily for major range, 4 hour breaks of structure, 1 hour daily momentum after a certain retest of an area, right? So you're really analyzing. This is why I say you'll analyze 90% of the time, right? Because you need to make sure that you see what the hell you see, right? So once again, last up candle, right? So every time frame has a color. Time frame is white. 4 hour time frame is white, right? So this right here was just a nice trade to capitalize off just for the day. And what did they do, right? Monday high, Monday low. So when they came back to this candle, they activated more sell orders, break Monday's low, right? So anytime we break lows or highs, we create more highs or lows. And we retest previous highs or lows, right? That's just regular trending market stuff. Higher highs, higher lows, lower highs, lower lows, right? So this is where everything applies. All right, so I'm still looking for my Elliott waves, whatever you want to call it. I call it 5-wave impulse. Either way, to each his own. The same thing is happening every time. Last up candle before the down move, right? You want to know what time this happened, right? Go down to the 1 hour. This happened between Sydney Tokyo session. Until around that area, 30 pip stop loss. Your drawdown was only 15 pips. Looking for, like I said, over 100 or at least 100. So it's just understanding like when to look for these certain things, right? So market opens up at 5, right? 5 p.m. Eastern, we already are in. So 5 p.m. Sunday night is Monday morning already for Sydney, Tokyo, right? So they start the flow of the day. You want to understand this because this is how they design the liquidity. We all see M's and W's all the damn time. Head and shoulders, inverted head and shoulders, right? So you just want to understand what they're doing, why they are doing what they're doing. So when they carried this trend and broke the low of Monday, most of the volume was selling because of the previous week, right? So majority of the time, whatever happens that Thursday, Friday, the previous week is going to follow up that Monday, Tuesday, right? So realize we sold off heavy during the week regardless, right? Slight pullback that Thursday, sold off Friday. So momentum was already bearish, right? That's why you will always want to have your overall perspective, right? Momentum was already bearish. Boom. So they sold off on Tuesday when they retested this area during Sydney and Tokyo, right? So this is I need you guys to follow me when I say this. They run the highs, right? They run the highs to go to the lows, and they run the lows to go to the highs. So there's certain highs and lows that they go for before they do that in the overall trend, right? Because that's why you have to have the higher time frame analysis. That's why the 4 hour, you want to look for the breaks of structure and certain things, like, right? So the 4 hours of breaks of structure. So realize when they broke this low point right here for Monday, large candle on the 4-hour. You could have caught a nice scalp move on this 4-hour candlestick right here when they retested the low precisely, right? Certain things like that, when you just start noticing it more and more and more and more, right? So now when we came in for Sydney Tokyo session the Wednesday on the 4-hour, bullish engulfing during the session. This was the 1 o'clock candle going into London session, right? So notice how bearish engulfing. So they gave out a false move, bearish engulfing to run the low of the previous day, to go collect liquidity, hit stop losses, to just come back to play inside this range to reestablish their sell positions, right? And I'm pretty sure news had happened during that day. This happened on a Wednesday, right? So this is your midweek reversal as far as the intraday move. The intraday move was the buy. The overall position was the sell. That's all this was. Because when you pay attention and you look left, because you gotta look left to get right, we broke the low of the week. So if you would have got in on the retest on the break of the low of the previous week, right? Because when we break lows, we make new lows. 50 pip drawdown, because this is the 4-hour, right? But you're still looking for over 100 pips, right? That's a nice risk to reward. As far as like if you would have a 2-to-1, you get what I'm saying? So it's just understanding how you want to manage your account. Like me personally, I still would have waited for that certain pullback back into this area, regardless, right? Selling pressure, major candlestick formation on the 4-hour, right? So the 4-hour and the 1-hour will help you see the daily momentum to help you catch your move. That's just the main thing, right? So these are your trap money candles that they come back to. So at the end of the day, they printed bearish for this whole week. On a bigger scale, they hit the daily imbalance, right? They hit the daily imbalance, which I adjusted because they never filled the whole imbalance. So there's still money left down here on the daily. But they had a nice reaction to where they came back to the imbalance right here on the 4-hour on a Tuesday, right? Realize that we had a gap. So this is the whole mindset behind every trade that I took on ZAR for the week. So being that I'm on the 4-hour and I see all of this, this is exactly what I did. Trap money on the 4-hour. Mark it off, right? Trap money on the 4-hour. All right, so at the time, for me, I just wanted to see how it was going to react over here. Right, so I realized that we had trap money on the 4-hour. Right, we had the gap. Obviously, we had to fill it. We do have this 4-hour, this down candle right here in the 4-hour from Friday, right? So just think about it like this: we were selling all week. Friday decided to buy up. Fake out Friday move because we did sell off during the day, before New York session, right? So it's more or less like this was just one of those things where like this was an intraday buy. This was the intraday buy, right? So now seeing that on the 4-hour and then I have everything else marked off, go down to the 1-hour, right? So now I'm realizing they're just the lower time frame is where they design the liquidity. The lower time frame is where they design the liquidity to take it out for the day, to carry the move out either into the next day or for the rest of the week, right? So I realized we had a trap money spot right here on the 1-hour around this gap. And the reason why I say that, when we downtrended, this was the last bullish candle printed that was big enough to hold up all of these orders to sell it off at this certain point inside this area, and it just so happened to line up with the gap, right? So I noticed that, marked it off, all right? So I'm gonna just explain everything. So this is the 1 hour trap money, right? So I'm color coordinated with everything that I do, so you guys can just understand, right? So the red box is the 4 hour. The red box, the box with the white lining and the red shade, that's my selling trap money area. With the blue shade, that's my buying trap money area. All right, I want to buy. This is where I'm looking for the major high probability setup, right? So realizing all of this, they are setting up to make a big, to make a bigger move inside of this range. Because at the end of the day, you want to realize this gap. Feel me? They fill this gap pretty quick, right? They fill this gap pretty quick on the Monday, right? This is what I mean by a false move Monday move, right? They gave off the large candle to just eventually trend it up going into the next day to get the major sell-off, right? So realizing that, I actually caught this sell that Monday morning for 100 pips. Whoever was on the call with me, they backed up. So where we at? Right. So this is how they design a liquidity. This is the 15-minute time frame. This is where I get my entries from and where I notice most of these things. You want to realize they create the M's and the W's to take them out, right? So they create the W to create the M, right? These equal highs and equal low points to come take out the W to come take out the M. And just look at how they're making these certain movements, right? So knowing that they filled the gap, cleared these lows, right? So this is how they set the money up on a lower time frame to give you the bigger move. This is what you want to pay attention to. You want to pay attention to how they're setting the bigger move up, right? And I identified certain areas, and as you can see, like these areas are hitting precisely of certain things of just how I'm explaining it, right? So realizing that when we broke this low, the whole model is create the W to create the M to take out the W to take out the M. Because the next model is they create the M to create the W to come take out the M to eventually come take out the W. Right, because we have a bigger equal low point, right? So we're looking for the equal lows and the equal highs, right? So as far as the run on the liquidity, the run on the money spots, they design these positions to take them out. They design these positions to take them out, right? These ones got taken out already, so I'm gonna turn these yellow, right? So these are just indicating that this was a spot that got ran already if I would have missed it, right? So we are looking for the dummy move, right? So these are when the dummy moves happen, when these equal lows and equal highs get created. Dummy move. Thought we was gonna keep selling to the low? No, stupid. We filled the gap, buy it back up. This was news. 100 pips in maybe an hour, right? When they came back for the next day and broke these highs, look how they played around with it for them to send it up to the imbalance to eventually sell it off. Understand how to read the market. This is your simple break and retest strategy. We broke the equal highs, 2 o'clock in the morning. Sydney's session opens at 6 p.m. Eastern, closes at 2 a.m. Eastern. Tokyo session opens up at 7 p.m., closes at 3 a.m. And the thing about the closing of this Tokyo session being at 3 a.m. is the fact that London session opens right at 3 a.m. as well. So the transfer of money and the contracts that are being developed to keep pushing the market around these certain times, because there's always a new trend in transition. There's always a new trend in a transition. So when they broke this high, because remember, the model is create the W, right? Create the W to create the M, right? To come take out that W, to eventually come take out the M, right? That's the model. That's the model, right? So understanding when they broke this high, the buy was the move, because all they did was retest it for London session to shoot it up to give us the New York reversal, right? So understand the timing of why I say what I say as well. When this sell happened, look what time it happened. Spiked it at 9:30, exhaustion wick, indecision candle, right? Major exhaustion, right? To give us the equal highs, right? And remember, this is a potential sell opportunity when we come into this area of this 4-hour trap money. And that's why they designed it the way that they did, right? New York reversal, false move, Monday move, right? 9:45, right? You enter anytime after 9 o'clock, you were in I was in profit like less than an hour, right? So it's more or less like just truly understanding like how you can catch your setup and just go about your day. I remember I couldn't even catch 20 pips, right? Don't get greedy. Don't get greedy. So when they broke this high right here, all they did was retest it, set us up on the 15-minute, right? Large candle through the zone, retest, take your trade, right? This trade went for 100 pips, right? 4 o'clock in the morning, 4:15, bullish engulfing. You could have entered right after that, still caught 60 pips, right? Pull back. So like I said, between the times of 7 and 10 is when I am trading. This move set up between 7 and 10, right? Could have bought this up for 50 pips, even though it went for 70. But the move was to sell, right? But and all of that happened between 7 and 10, right? So you were looking for that equal high point. You were looking for these equal highs to be set to carry out the New York reversal, to give you your trade for the day, your low risk, high probability setup. Picture perfect, right? And I'm gonna post something up real quick, right? Because I really analyze and study why like these certain. I need to know why the market is moving. I need to know why. I need to know, like, so I can be ready for the next run, right? So this is what I marked up on ZAR. Like these are the potential plays, right? This is the one play that I was able to catch. This was the second play I was able to catch on ZAR, right? So understand that there were 4 high probability setups that, there were many high probability setups, just depending on what you were looking for. But based on how I'm showing you what I'm showing you as far as the trap money areas, the last up and down candle, the imbalance, right? These purple areas are Sydney Tokyo range, right? I'm going to go into that tomorrow because that really matters, right? So understanding just based off the trap money spots and the imbalances and the equal highs and equal low points, right? Imbalance area back down to the 1 hour trap money, which is the weekly's low. This right here was the weekly low. They matched the weekly low to give us an equal low point, right? Create the M to come create the W to come take out the M, right? So this was just that model, right? Right. So as you can see, when we break and retest certain areas, we are going that way. Once we're above, we're above. Once we're below, we're below, right? And you can see how we're setting up for these plays. When we broke this high right here for this buy, and we came back to that inbound to that sell imbalance, yes, we sold off. But understand where the momentum was for the time. It was the buy. Why? Because we broke a high, right? This was a bullish engulfing on the 4-hour, right? Breaks. You want to look for your breaks of structure on the 4-hour. So this is just how you want to read your chart, the mindset that you want to go in the market with, right? How are they designing the market for you to catch your setup? Where are those highs and lows? Where's that M? Where's that W? I'm looking for you. I need you, right? So as you guys can see, this is just like how precisely you can just like have a low risk, high reward trade. As long as you just wait for these certain things to happen, right? So when they sold all of this off, they came back, created this equal low point, equal high point, right? So this was Monday, Tuesday, Wednesday, right? So they gave us the W on a Wednesday. Wow, right? Midweek reversal. They gave us a fake head and shoulders right here, right? And they definitely sold it off for over 100 pips. Fake head and shoulders right here, reverse it Thursday, right? So they reversed the markets between the times of between Tuesdays and Thursdays. They typically set the high and the low of the week between Monday and Tuesday, right? They start the volume of the market during that Monday. Realize week before we broke the low of Monday, we carried lower. We broke the high of Monday, we went higher, right? So there's just certain things that you just have to be aware of to help you understand why this market is moving, where this market can go to, how you can get in, where can you get out, right? So everything here are intraday setups that are swing moves potentially, right? So you want to understand they're doing it on lower time frames as well. Equal highs, equal lows, right? Create the W to create the M, break the W to break the M, right? And just look how precisely they came down and matched that low before they took off. This was FOMC news, right? You could have been in this trade at 145, and your account just would have been flipped. That's why I'm like, nah, I'm not. I actually missed this buy because I was looking for this juicy baby right here, right? So like I said, the 1 hour, right? The 1 hour gave you your confirmation. Right. So all they did was come back to retest the money to carry out their orders. Right. They designed the liquidity, equal highs, equal lows, ran it during New York session, right? Between those times of 7 and 10 in the morning and at night, right? 9 o'clock during Sydney, Tokyo session, held it around the high, spiked it at 11, held it, right? Played with it. London session, opening of London. New York session, reverse, right? They just played with the money. You just got to wait for the setup, right? You know you're looking for this retest down here, but look how fast they made the move. And that's the thing. They make these moves fast from these areas, right? So when they ran the liquidity on the low, They confirm their buy orders. Confirm their buy orders for the week. Trade higher. Break, retest. Literally. That's what they do every time. Took the market higher on a Friday. So overall, you could have caught over a couple thousand pips altogether on all four moves, right? And I say that because the way I trade, I take 2 positions on every trade. So just on this one pair by itself, you waiting, looking for liquidity to be run on certain areas to catch certain setups. You were able to cap off over 100 pips each setup. No, you was able to cap off over 300 pips each setup based off of the fact that you had 2 orders, right? So like I said, this happens on everything. This happens on everything, right? I trade ZAR, oil, gold, GA, GJ, right? Oil was on some bullshit. They just kept us trapped inside of a zone. I was able to cap on this sell the other day. And I got greedy trying to buy it too early. Lost some of my profits. It is what it is. At the end of the day, right, we're going to go into some more tomorrow. I appreciate everybody that was on here, that's on here right now. Y'all have a blessed night. Chairman call.